Hello, welcome once again to our real estate podcast. Today's topic is Tampa, Florida housing market update, Redfin August 2022 update. And we are going to talk about what's going on with respect to this particular market region. My name is SeeWing Yee from the Yee Real Estate Network. Just briefly describe my background. I've been in the real estate consulting investment business for almost 20 years. And also, I've been a real estate investor for more than 30 years. And my myself personally, and as well as over the years, I have taken thousands of our out-of-state real estate investors throughout the country. They live in high-cost markets, but mainly, most of our investors, around 80%, come from California. So over the years, we have entered around 30 to 40 states. The only states that we have not purchased any rental properties over the years are in the New England Northeast and in the way up north, uh, that region of Pacific Northwest in like Wyoming, Montana, Minnesota, South Dakota, Iowa, Nebraska, those areas we have not uh, purchase any investment properties. So with that said, again, so I have a very good understanding of the overall broad market. I'm not married to any specific market. However, we have taken our mom and pop real estate investors from all over the country to buy low affordable uh, rentals, single family home rental mostly, some duplex and fourplex, with doing 25% down payment and positive cash flow properties, and so they can achieve their goals. All right, so if you're listening to this video, uh, uh, there are three objectives. One is for those of you that already purchased in the Tampa, Florida market. Uh, it's nice to know what's going on, right? To protect your portfolio, to understand what's going on, and for anyone that trying to uh, buy a primary home for only occupied properties to live there in the Tampa area. You could also benefit from learning what I have to say. And finally, for any out-of-state investors or any investors really that still want to buy in the Tampa, Florida metro region, this is the place. This is the information you need to know. All right. So without further ado, uh, let's share my screen. And by the way, when I concluded with this presentation, please click the like button to increase my YouTube algorithm, and also to subscribe to my channel, because I'm going to share this kind of market update, housing market update in many cities, in many markets. I have already done many markets so far. It's an ongoing thing. I'm going to use a Redfin uh, website to go over these real-time housing updates, go over all the numerical metrics, and so it'll be very, very exciting. So, and also, if you wish to become a free member of our organization, the Yee Real Estate Network, at the bottom of this video, you may click and sign up for a newsletter, put down your email, and you will become a free member of our organization. You will receive timely, educational, free real estate education updates and off-market investment opportunities in the hottest markets in the country, mainly in the South and Southeast. All right. So with that said, let's go over. Without further ado, let's do a very deep dive on the metrics associated with Tampa, Florida. As you know, Tampa, Florida is getting to be very huge. It's not only about Tampa. It's within like 50-mile radius of Tampa, you have St. Petersburg, you have Sarasota, you have all these sub markets into the path of growth, out to the outskirts of the metro. So it is a very, very huge metro in the southwest Florida area, in the Gulf of Mexico side of Florida. So Tampa is one of the fastest growing real estate markets in the country, not only in the past 3 years during the pandemic, but for the past 20 years. In fact, many of our real estate investors have purchased very high cash flow properties way back in 2010 when we started promoting this market. So we have in-house network available in a turnkey provider in the Tampa market that are able to help out-of-state investors to buy turnkey positive cash flow properties. So again, many of our investors have done very well in this market over the years, and especially in the past few years. So with that in mind, so I have a very unique understanding of this market, obviously, because we have so much experience. We believe my organization have introduced this market to investors more than any other organization out there in the country. So with that said, let's go over there's a short timeline, right? So the blue line indicates 2019, and the red color over here indicates 2020, the year, and then orange line represents 2021 housing data, and of course the black line represents this year, 2022. So the median sales price in 2019, right before the pandemic, was 234. Just go to show you this amazing, insane skyrocketing of prices with respect to this market during the midst of this pandemic crisis. So this is truly an epic. People that invested here, whether you're a primary home buyer, you purchased a home in the past 3 years, right? And if you're real estate investors, if you plunge into this market in the past 3 years, you have made massive amount of wealth and equity just with one rental property. If you bought more than one property in this market in the past 3 years, you are like laughing your way to the bank. That's how life financially have changed for you. But I caution you that regardless of what's going on in the short-term challenges that we all been facing in this U.S. economy and the marketplace, it's important for anybody, not just real estate investors, to have a buy and hold strategy, long-term, over time. That's how you create wealth over time. Don't do any kind of flipping or those kind of things. Buy and hold long-term, at least 7 to 10 years, or preferably much longer. In fact, never sell your real estate assets, right? So create generational wealth. So anyway, so 2019, this is mind-boggling. 2019, the median sales price was $234,000. Look at 2020, increased 12% appreciation year over year from 234 2019 to 262,000 in a mere 1 year. Then it gets better. From 2020, when the pandemic started, to 2021, look at the skyrocketing price increases, 19% year over year. And then from 2021 until now, from 309K to all the way to as high as almost $400,000 median sales price this year, last month, June. So from 235,000 to almost 400,000 in a mere 2.5 years. This is historic. This is once in a lifetime wealth accumulation strategy that very few people are able to experience. Like years later, when you can sit down with your grandchildren, you will tell them years ago, back in 2020 to 2022, I have invested in this Tampa market. That's why you guys are living the good life, right? Those kind of things. Yeah. Anyway, so this is mind-boggling. So the question is, how much of this equity you have gained, you get to keep, right? Well, no one knows the answer. What I'm trying to say is some people talking about a crash, some people talk about a correction or a bubble. All I know is right now we still have a historical low supply of inventory, and the demand is still pretty high, even though the interest rate has skyrocketed from 3 to 5 to 5.5%, maybe even 6% recently. So other than that, so there's a lot of challenges, but again, you stick to your gun, invest for long term. So next question you might have is it still feasible to to invest in this market moving forward? That's a big question. I will answer toward the end of this presentation. All right. So we only have about 15 more minutes left. So let's dive deeper into what's going on. All right. And anyway, let's go over the active listings. Right. Active listings indicates currently the whole big picture. How many homes are actively listing in the multiple listing service for the public to view, and the answer in this is around 11,839. So the inventory of homes are steadily increasing. By no means we are even coming remotely close to a balanced market, if you will. The balanced market is around 4 to 6 months percent of inventory available. We will go over that data momentarily, but let's just bear in mind that today's active listing is like almost 50% above and beyond the active listings same time last year, 2021. So why we have so much more listings? Because the demand has subsided, pretty dramatically based on the rate hike. So the demand is not there to absorb the increased amount of active listings. Therefore, we have some potential challenging situation going on with not only in this specific market, but in many real estate markets throughout the country. So short-term trends are very hard to predict. It's very hard to draw conclusions, but we could make some educated guesses as to what could transpire if this kind of trend continue throughout the later this year and towards next year. So it remains to be seen. Obviously, nobody have a crystal ball. So now, having said that, the second metric we need to go over is the new listings. The new listings is month over month to see in the past 30 days from July to August how many new listings has come into the market. And in this case, is 1,670 homes are new listed in the past 30 days. So it has decreased the past few months. So homes are not selling as fast. Once again, it's based on the demand has decreased significantly because the affordability factor. When you increase the interest rate from 3 to 5.5%, a person's potential buyer's mortgage payment are therefore increased exponentially, around 50% higher. So that caused a lot of potential buyers to not qualify to buy the home they want to buy. That's why the demand has subsided. So at least for the short-term situation. So year over year, the new listings on a month-to-month basis has decreased 3.8% from same time last year, 2021. And then the next metric we need to go over are the pending sales, right? So pending sales. So the pending sales is around 1,146. So the listings to pending sales are still pretty stable. We have 1,146 homes or pending sales, pending contract signing, those kind of things, and still is 20% less down from year over year from last year. So if there's and also if you compare to 2021, so 2021 have more listings, and 2019 also have more actually less listing. So that's pending sales. And now the next thing we need to look at is actual homes sold, right? Just because the homes are in the pending sales category does not mean that all those homes will be sold. So the sold is 1,162, which is on a downward trend. So that tells people that more potential contracts fall out of escrow, or maybe cancel contracts with the new construction type of homes, perhaps. So it's 21% decrease year over year from 2021, right? So again, home sales have decreased because a lot of potential homeowners currently and a lot of sellers, they're not willing to sell because many of them, 80% of them are locked in at a mortgage interest rate of 4% or lower. You know, if they have a lock, if they have a 30-year fixed rate locked at 4% or lower, right? And you know, the sellers have very little incentive to put their house in the market, because if they do so, if they sell their homes, they have to deal with the 5.5% new interest rate and a potentially higher price if they were to move up to buy a bigger home. So it really numerically does not make sense. Having said that, you know, you're always going to see people selling for whatever reason, given their life situation. Some people are you know, some death situations or probate, if you will. Some situation where divorce or disability, whereby somebody on a stress, some homeowner is under a stressful situation. They have to sell because their life situation dictate they want to sell, and the remaining people that are selling at this time because they want to, they are probably retiring. They want to use the proceeds of the sale to buy another cheaper home for all cash, or they to live on for the rest of their retirement. Some homeowners, they want to sell regardless because maybe they want to move out of the country. They want to live in Mexico full time or some other overseas country, right? So there are many reasons we do not know, but so that's what's happening. All right. So, and the next thing we need to go over is the new listing median price, right? The people, when sellers are the new listing median price are right at the 400,000 level. So this price are being listed into the marketplace, and then determine with the buyer who's going to buy this home at what price and so forth and so on. All right, and then the next thing is, let's look at price drops, right? This is very important, somewhat important. You're thinking, you know, price drop is very significant. No, the price drops mean in this Redfin website is the percentage of active listings with price drop, which is 13%, which is very huge. So a lot of the sellers in the past few months, due to interest rate increase, they realize that demand has subsided drastically because a lot of people cannot afford to make this new payment on this higher interest rate, and they have listed their home at too high a price, thinking they will, they're getting multiple offers in bidding wars and all those kind of situations they have experienced up until now. They realize that no, there's not that many people in a buying situation, so they may have to reduce the list price. So very large percentage, we're talking double digit, 13% of the people only in this past few short months have overlisted the price. They have to reduce their price. By reducing their price does not mean that the market value of homes in this region is dropping. No, it does not mean that, you know, the homes are crashing. No, that's not the case at all. All right. So, but you know, we can only expect that for the duration this year. The reality sets in. The seller is going to realize that they cannot bump up their list price above and beyond what the market demands. So they have to come back down to reality. All right. So clearly, it does not mean home prices going to drop for those reasons. All right, and then median days on the market. Now, so let's look at the median days on the market. Wow. So that tells me still a very, very good hot market. There's a lot of real estate transactions going on because the median days on the market is 11 days. Right, 11 days is a very, very quick sale once the seller put their house on the market. So within 11 days, they are receiving an offer, so which is even less than 2 weeks. So that tells me the demand is still out there, right? Because Tampa Metro, even a $400,000 median price is relatively low compared to the other markets in the other part of the country. So still very affordable, even though the housing prices are skyrocketed in the past 2 years, right? So from 234 to 400,000, we're talking like, you know, I mean, major increases in equity in prices. So there's a lot of demand, people migrating into the market, people moving here from all over the country, from the Northeast, from New York, New Jersey. A lot of people, because of the remote work of flexibility, people are moving away from those high cost markets in the upper Northeast and Chicago, wherever, and even California for that matter. People are flocking into Florida, which is Florida is a number one in population growth, number one of all the 50 states, not just this past pandemic, but for the past few years, even before the pandemic, because everybody wants to come to Florida for retirement, for vacation, and for whatever, right? So it's a huge population growth, not only in Tampa but in few other markets in Florida as well. And this trend will continue, right? As the baby boomers getting older, as the millennial is moving to Florida for jobs and everything else, and for lifestyle, all these kind of things. Very desirable place to live, and it's still extremely very affordable. So the future is very bright in the Tampa, Florida market. And so anyway, so yep, meeting days on the market is very short. So this means there's a lot of real estate activities going on. It's still a very competitive market, I suspect. Well, in fact, let's go over, let me see, what's most important? The month of supply, right? Now, this is a very important metric. I mentioned earlier before, you might have heard it before, 4 to 6 months is potentially a balanced market. Anything less than a 4-month supply of inventory still is indicative of a hot seller's market, where they will dictate the terms and conditions of a particular house. So let's go ahead and click this month of supply. Let's see what's the real deal. Month of supply is 10.6 weeks, 4 weeks per month, 4 weeks divided into 10.6. We're talking barely over 2 months of supply of inventory. So that clears to tell everybody that this is a very strong market. The supply of home is too low relatively to the demand. Therefore, economics 101 pretty much tell you the fundamentals that the housing prices will continue to appreciate into the future based on this important metric. When I say appreciation, we're not going to talk about double-digit or triple-digit or quadruple-digit appreciation anymore, like we experienced during the pandemic before, when we have historical low rates of 3%, which is shocking. One time history will never happen again. You're getting 3%, so those days are gone. Right now is more of a healthy market, because you cannot sustain in triple-digit appreciation. That's not sustainable. So we're coming back to a healthy market, which is good for the buyers, especially first-time home buyers out there that has been priced out of the market due to the multiple offers and bidding war that we have seen recently in the past few years. Does that make sense during the pandemic? All right, so this is a very positive trend for this market in the Tampa region. So what other metric we need to go with? So let's go over average sales to list ratio. What is the actual sales price? Did the buyer offer more or less than the final list price? So let's determine that. So this metric tells me that the average sale to list ratio is 0.99. What does this mean? That means the buyer are able to offer the price slightly below the list price, right? So coming back to a sort of a healthy situation. Because of the demand and supply situation, because of the interest rate hike, more people are being priced out of the market. But look at this. Look at back in April of this year, 2022. We still have a bidding war before the interest rate suddenly rose. So we have a 1.019% average sale to list ratio. That tells me that the final sales price is over asking. The buyers are buying over asking. They have to bid. there was a multiple offer situation during the first few months of this year because the interest rate was still very, very low, around the mid threes. Now it's on the mid 5%, give or take. So there were multiple offer bidding war situation up until a few months ago. Then when the interest rate rose to the current situation, current rate, then you'll see that the offering price is a little bit below the list price. All right. So what else we need to understand? Anything else out there? I think that I may have addressed all the issues right here. Okay, medium search again. We have seen a systematic increase of prices. So because of the still in this market, people still want to move here, right? And this market are not in danger of a correction because of the still barely over 2 months supply of inventory, right? Very low inventory still as we speak, even though we see some inventory spiking, right? Based on the active listing, right? If you saw that earlier, right? So inventory is spiking, not that much spiking because the demand is subsiding. So we have less sales. So that makes it seems like the inventory has spiked dramatically. No, because there's not enough demand, at least on a short term, to absorb this minuscule increase in of inventory levels. Does that make sense right now? All right, so my big picture is for the foreseeable future, if the interest rate is all about interest rate, right? If the interest rate maintain itself at 5 to 6% for the foreseeable future, we'll have a slow market condition. I mean, if the interest rate goes beyond 6%, so this is crazy. I don't even want to go there. If the interest rate goes beyond 6%, you can have less demand because most home buyers, owner occupied buyers, they qualify based on monthly payment, right? That's all there is to it. So if the interest rate go higher than 6%, even less people are going to qualify to buy a home as opposed to right now, which is pretty challenging already. So yeah, we pray that the Fed are not going to increase the interest rate any more than it already has. But the Federal Reserve does not care. They just want to control inflation. If the inflation is too high, continue to be high at 8 to 9% officially, but we all know in reality the inflation rate is probably 15%, right? I mean, you go to the grocery store, you go get gas, you do whatever, you will see your pocketbook feeling the effect of the paying more for all those everyday things. All right. So if the interest rate is going to either toward the end of this year or the beginning next year will decrease to 5%, maybe 4.5, 4.6, 4.7%, then more people will be able to afford the monthly payment to buy a house. So we expect housing activity transaction to pick up. As a matter of fact, at the current mortgage rate, let's say 5.5%, continue to be it is for the rest of this year, we're still going to see more volume of sales activity because during the summer, right, it's a seasonality situation. During the summer, people are not focused on buying houses. That's why you see a very low sales amount, right? People are going on vacations, well deserved, right? Anyway, so now everybody back to school, everything is coming back to normal. Perhaps a lot of potential people that want to buy a house, they are focused toward the end of this year to buy the house, even at the higher interest rate. So the bottom line is people may not be able to afford the house they want to buy before the interest rate rise, right? But for those people that are still motivated, they're still qualified, they want to live in this market for a long time, they have the money to do so, they qualify, they have cash reserve, it's the right time to buy, whatever, they will buy. But the amount of the price they will buy at a higher interest rate will be less. So people have to adjust their expectation, right? So, what I'm trying to say is, if a median sales price back in May was 392 at, before May, let's say before the interest rate rise was 377. Now the interest rate is higher. They can only afford a little bit less of a home. So you know what I mean? But overall, the way I see it, the big picture is this kind of information we just talked about. So Tampa, even some people say the skyrocketing prices occur in the past few years. What goes up must come down. Not necessarily. Some seller may reduce their price by 3 to 5%, maybe, right? Which is not significant, right? Reducing a $400,000 price by 2 or 3% is only about $10,000 reduction of a list price, right? So that's nothing to be feared. I do not see anything bad happen in this market, given the data that we discussed. So the long-term perspective, people going to still move in this area for a lot of reasons, for lifestyle, for for the weather, for no Florida have no state income tax. The home is still very affordable, a great place to live, to enjoy all the amenities that's available in the Tampa market. St. Pete Beach is rated #1 beach in America. St. Pete Beach and all the coastal areas in St. Petersburg and the surrounding water area around Tampa is the prices are extremely high, obviously, right? So the future is very bright. For those investors that want to buy, they want a cash flow, you're not going to buy at $400,000. You're going to have to buy a single family home as a rental property for around $300,000. That is your sweet spot. If you can buy an investment property in the Tampa area for this year and beyond, you cannot buy in the center of Tampa because the inner circle, the center of Tampa, is very expensive. You cannot cash flow. So you have to go into the suburbs. You have to go into the sub-market of Tampa, like 50 miles away in several, to the north of Tampa, or to the east, or to the south, where the prices are cheaper, but then there are paths of growth, in the Tampa metro. So you can find a property that are like $300,000 that rent for $2,000, and you put 25% down payment, you should achieve positive cash flow, right? So that is the metric that you should use. So having said that, again, I say it again, if you're a home buyer, many people are moving from out of state, as I stated. If you want to live in the Tampa area, right now is as good as time to take the plunge. If you can afford it, that is. But I think it's a buy and hold strategy for everyone, really. Investors, pick your spot. We have connections in the local area. We have a turnkey provider that will provide you with a lower cost, discounted new construction homes that can cash flow, because we have builders, local builders that work with us, our investment network from out of state, because we have many investors that they are welcome to work with, and so those new builders locally, they build just for investors. Okay, so if you want those kind of information, go ahead and sign up to our newsletter database within our website below, Yee Real Estate Network. And of course, click the like button if you enjoyed this presentation, and subscribe to our channel, because we're going to talk about many different markets on a weekly basis. And so there is all right, so that's all I have to say. Hopefully you got a lot of good value from this presentation. My name is SeeWing Yee from the Yee Real Estate Network. Have a nice day. I'll see you on our next video shortly. Bye-bye.